Why has silver seen some of the most dramatic price swings in history? Let's take a quick journey through time. Silver has always had an exciting history, not just for its use as a currency, but for its wild price swings. The first significant jump in silver prices came during the 1970s, when investors turned to silver in times of high inflation and economic uncertainty. People were worried about the stability of their currency, and silver seemed like a safe haven. In fact, silver prices reached record highs in 1980, soaring over $50 per ounce. Now, if you've ever heard about the infamous Hunt brothers, you'll know they were a huge part of that spike. They tried to corner the silver market, buying massive amounts to drive prices up, and it worked for a while. But when the market collapsed, silver prices came crashing down, losing nearly half their value in just a few months. That was one of the most dramatic examples of silver's price volatility. Historically, silver rises during economic crises, inflation, or when investors seek a safe haven. But it's also driven by industrial demand, something that separates it from gold. As technology advanced, the need for silver grew. It's a crucial component in electronics, medical devices, and solar panels. So, when industrial demand increases, so does silver's price. But silver isn't just about protecting wealth, it's also a metal with massive industrial value. And that's where things get interesting. Let's talk about the gold to silver ratio. Historically, this ratio has averaged around 15:1, meaning 1 ounce of gold was worth 15 ounces of silver. But today we're sitting closer to 80:1. That's right, silver is much cheaper compared to gold than it's been historically. What does that mean for investors? Some believe silver could be massively undervalued, suggesting there's potential for the price of silver to catch up to gold. If this ratio starts to narrow, silver prices could rise significantly. The thing about silver is that it's more volatile than gold, mainly due to its dual role as both an industrial metal and a precious one. While gold tends to hold steady, silver often fluctuates more wildly, giving it both higher risk and higher reward potential. So, for those watching the gold to silver ratio, this could signal an opportunity for silver to make significant gains. Did you know silver is in almost every piece of modern technology? Here's why that could mean big things for its price. Silver isn't just sitting in your jewelry box or coins, it's all around you in the modern world. From the smartphone in your hand to the solar panels on rooftops, silver plays a crucial role in almost every piece of technology we use. One of the key reasons silver prices might rise in the future is its role in the green energy revolution. Solar panels, electric vehicles, and medical devices all rely heavily on silver. And as we move towards renewable energy sources and advanced tech, demand for silver will only increase. The electric vehicle boom is also a huge factor. As more countries push for green energy policies, the demand for EVs is skyrocketing. And guess what? Silver is essential for their batteries and electrical systems. So, as our world continues to go green, silver's importance will only grow. With rising industrial demand, we could see a strong push for higher silver prices in the coming years. Is silver becoming harder to find? A supply crunch could be on the horizon. Silver might be all around us, but it's not as easy to get your hands on as you'd think. Unlike gold, silver gets used up. Large amounts of it end up in landfills because of its use in electronics and industrial applications. Micrograms of silver are embedded in phones, computers, and medical equipment. And these tiny amounts are almost impossible to recover. Mining silver isn't getting any easier either. While demand is rising, mining outputs have remained relatively flat. This creates a growing gap between supply and demand. Recycling silver is costly and inefficient, which means that a lot of it is being lost over time. If this supply crunch continues, it could cause silver prices to rise dramatically in the near future. The combination of increased industrial use and limited supply could lead to a situation where silver becomes significantly more expensive. Thinking of adding silver to your investment portfolio? Here's what you need to know. So, you're thinking about investing in silver. Should you? Well, like any investment, there are options, and it's all about choosing what's right for you. You can buy physical silver in the form of coins or bars, silver ETFs, exchange-traded funds, or even silver mining stocks. Physical silver is the traditional route. It's tangible, and you know exactly what you own. But keep in mind that storing it can be a hassle, and there are premiums attached. Silver ETFs are another option, giving you exposure to silver without having to physically store it. Then there are silver mining stocks, which can be a more speculative way to profit from silver's price movements. In short, silver can be a smart addition to a portfolio, especially as a hedge against inflation and economic instability. But remember, It's a long-term game. The key is not to expect quick returns, but to think of silver as a way to build wealth steadily over time. Enjoyed this video? Make sure to subscribe to our channel for more jewelry, education and insights. Plus, get an exclusive look at how we create stunning pieces right here in our workshop. Hit that subscribe button and join us on this sparkling journey.